my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A very interesting key reversal up yesterday. It had a huge tongue on it topside, reaching up over the seemingly still influential upper time, currently at 104.62, the broken January to May 2021 bearish Andrews pitchfork, and up to the combination of February and March 2017 lows at 104.92 before plunging back down below the broken upper time, as well as the long moving average, currently at 103.69, to finish at the base of the congestion zone, 103.38 to 103.69. This leaves the way open to look at the action since mid-November as a possible double top. Now, up until yesterday, the slightly bigger picture had seen the market moving in between the support of the upper trend line, currently at 102.24 of the September to date ascending wedge pattern, and the overhead resistance of the upper time. This had all highlighted once again the two recent core patterns seen here since late September. A September to date ascending triangle and a September to date ascending wedge pattern, currently at 98.29 to 102.24. I've highlighted the ascending wedge pattern in blue to show you a clearer idea of what I'm talking about. We've seen a clear break above the upper trend line of the ascending wedge pattern. This left us with some topside opportunities. We've already reached and exceeded the primary and secondary targets for the ascending triangle pattern, so these have been retired. We still have live the possible targets for the ascending wedge pattern of a primary target X2 in the 105.35 area, and a secondary harder to reach target X3 in the 107.65 area. However, the upper time's capping action, still at capping action, with the long moving average and congestion sitting in the middle of what's going on, well, as I said yesterday, it's cannot go on much longer as the upper trend line and a time meet at an apex by late December, so watch out. Now, so far today, a reactionary move back up as the market works its way through the congestion between 103.38 to 103.69 and the long moving average as well. A bearish black crow yesterday as the recent approach up to the declining long moving average, currently at 121.53, and the congestion and early May low at 121.54 proved to be too much after 3 days of testing, and prices dropped down in a fairly free zone. Interestingly, the bullish incentive was not extinguished as prices halted ahead of testing the upper trend line, currently 118.74 of the September to date ascending wedge pattern. I'm still mindful that the move up late last week still managed to reach target X at 120.20, the primary target for the late September to late November ascending triangle. As I've repeated often here, much as in euro dollar, there are two core patterns here. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a late September to late November ascending triangle, which has run its course, and also September to date ascending wedge pattern, currently 115.70 to 118.74. Both patterns have previously been compromised and both have repaired themselves. Late 3 weeks ago, there was a break higher over the flat trend line of the ascending triangle, giving us the previously achieved primary target X in the 120.20 area, and a secondary harder to reach target X1 in the 122.5 area. More recently, we've had consecutive closes over the upper trend line of the ascending wedge pattern, leading to a primary target X2 for this pattern in the 124.20 area, and a secondary harder to reach target X3 in the 128 even area. Of the remaining targets above, we now have to wait and see what the market will do as it gets squeezed in between the declining long moving average from above and the rising upper trend line below. Now, so far today, a lower open but a reactionary move back up over the old target X at 120.20 and up to the congestion at 120.73, though not testing it. Prices have moved back down and today look a little like a bullish opening white Mariposa right now. Euro sterling. A second bullish white soldier yesterday and a follow-on higher to the previous session's bullish Harami. The market moved up through some clean air once it overcame the medium moving average, currently at 86.22, but halted the next overhead resistance, the April 2020 low at 86.69, before dipping to close. As I've previously mentioned, prices have reached down to target X at 86.02, the primary target for the recently highlighted roof pattern constructed during November. I picked out in blue on my daily chart. And this has still left us with the secondary harder to reach, much harder to reach target, to be honest, if I'm sure. Target X1 below in the 85.45 zone. Interestingly, I've decided to keep for the moment the broken, since repaired and now broken again, lower time, currently at 87.32 of the April to August bullish Andrews pitchfork on my daily chart. I'm going to keep a close eye on this lower time just in case. And I'd also like to point out there is no finessing of this bullish Andrews pitchfork into a shallower bullish, no finessing of this pitchfork into a bullish Andrews pitchfork into a shallower bullish shift pitchfork. This is not possible here. Once it is finally done, it will be wholly retired. Now, so far today, a move lower, below the medium moving average, but a pullback up to what looks right now like an indecisive spinning top, with aspirations to be a hanging man, perhaps. US dollar against the Indian rupee. An interesting piece of action yesterday. A gapping higher open, since filled in, that ended up being a bearish engulfing pattern, if only just. Once again, the base of the action, on an open closing basis, was on the lesser Fibonacci line at 81.63, with the rising short medium moving average pushing up from below, currently at 81.68, though yet again the tail dropped some distance below before pulling up at the close. The top side was once more capped by the same recent congestion, 81.94. though this hasn't been really tested the last few days. Beyond that, the next congestion is in a small band, 82.15 to 82.26. I'd now like to discuss the larger scenario, one that I've been often mentioning in my earlier commentary. So I highlighted the September to early November ascending expanding wedge pattern. You can see that in blue on my daily chart. In early November, prices pushed down through the lower trend line and carried down until 2 weeks ago. This process confirmed the pattern and gave a primary target in the 1890 zone and a secondary harder to reach target X1 in the 8028 zone. In mid-November, the market reached the primary target, but we've since seen the market bounce up from the rising medium moving average below, currently at 8074, such that I'm now wondering if perhaps, just perhaps, reaching the primary target may have been enough. This requires a little more contemplation and some further data over the next few sessions. In the meantime, we have a fresh September to mid-November bullish Andrews pitchfork. The market is at the moment, once again, not far from the lower time, currently 81.44. Now, so far today, yet another interesting piece of action. A significantly lower open, though still within yesterday's range, but an immediate move higher, up through over the lesser Fibonacci line at 81.63 and up to the rising short medium moving average, but then not really going anywhere after that. US dollar against the Brazilian real. A counter to the counter bearish harami yesterday. The action perfectly encapsulated the current range, supported from below by the broken upper time, currently at 535.15, of the July to late August bullish shift pitchfork, and capped by the lesser Fibonacci line overhead at 543.81. Still pondering the question I placed yesterday of whether the action over November is a possible bullish halfway hesitation, even maybe a bull flag type action, or are we just topping again once more? Below, we still have the 50% Fibonacci line, the May 2020 to April 2022 move at 527.37. I continue to say this does not look that good a support, though the other slightly lower 50% Fibonacci line at 522.76 of the March 2021 to April 2022 move does look a little bit better support. I suspect the strength of the latter may be due to the conglomeration of moving averages nearby, which are now dispersing and thus losing their joint efficacy. One additional point to keep considering: we are set up to make a monthly key reversal for November. Thus, if we close on the 30th of November either over 541.54 or under 517.91, then we'd be on. Right now we're looking at the lesser cousin to the monthly key reversal, an outside month. US dollar against the Mexican peso. A lower but still indecisive spinning top yesterday, coming as it did after last Friday's seemingly decisive combined key reversal down and bearish engulfing pattern, if only just on the latter. I've highlighted in recent days the combined overhead cap of the declining short moving average, currently 1939.52, and the upper time, currently 1944.92, of the broken but still influential March to July bearish Andrews pitchfork. Together they have all contributed to the bearish pressure and the failure on Friday to close over the May low at 1940.70, despite piercing it. Overall, the recent moves lower all relate to the previously highlighted crossover combination of late October of the broken upper time of the March to July bearish Andrews pitchfork and the middle time, currently at 1971.39, of the still intact bearish shift pitchfork for the same move. I've highlighted this pitchfork in blue to help aid visualizing it. The question now is what's next, as a significant November low at 1923.21 is nearby and the March 2020 low below that at 1915.03. Now so far today, well, a big move lower, a big move below the significant November low at 1923.21 and the March 2020 low below that at 1915.03. We are now in free air without any significant support until the January 2020 base congestion at 1885.5. And with one significant support below, highlighted in blue. Yes, it is the lower time, currently at 1881.92 of the significant March to July bearish shift pitchfork. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.